another episode with Zetsos Forex Trading Academy. Today on Trade with the Golden Nugget Trading Robot, we're gonna look at time frame. This is module number 4. If you've made it to this video, you're a very committed person. I can't wait to see your results and how much money you make. So without further ado, let's jump into it. Your time frame. Your account size decides your time frame, not the other way around. Okay? What will you learn in this module? How time frame works, which time frame suits your account size, and why higher time frame means you must check your trades regularly. Okay? What is a time frame? So basically a time frame tells you how much price movement is compressed into one candle on the chart. So if we're on the 5 minutes time frame, meaning every 5 minutes a candle will open and close. It will take another 5 minutes to maneuver around, open and close. Okay? If we're on the 4-hour time frame, meaning every 4 hours the candle will maneuver around and close. Just like that. Okay? That's what time frame means. So account size versus time frame. This is the most important rule of the course. Your account size determines which time frame is appropriate for you. A small account can safely hold a trade open for hours on the higher. A small account, cannot hold safely a trade on the higher hours or higher time frame because the stop loss required is too big. Yes, you're following the trend of the higher time frame, but execution, calm down, brother, calm down. You're looking to swing a trade, yes. Behavior, yes, wise on the higher time frame is good, it's telling you bullish. But if you set up a buy on that time frame, is your account size able to sustain any form of drawdown? What do I mean by drawdown? If the market moves in negative a bit before it pushes up, will your account size survive the drawdown? If no, then calm down to the smaller sides. Okay, it is very important. So if you're having a $10 to $100, mostly the highest time frame you can enter a trade on is a 15 minutes. Stay away from the 1 minute, guys. It is a very useless time frame. The market is just dilly-dallying and there's a lot of noise. Don't put the robot on the 1 minute time frame. I will tell you this once and for all. 5 minutes is okay, 15 minutes is okay, 30 minutes is wonderful. Okay, the higher time frame, the higher you go. If you're swinging a trade based on direction, you can do that. But stop loss is gonna be managed on the smaller time frame. Okay. So these are the basic information as far as time frame goes. Okay. The monitoring rule. What do we mean by that? This is the critical and most thing that students miss. The time frame you trade on tells you how often you check your trade. If you took your trade on a 5 minute time frame, meaning every 5 minutes you're supposed to check on that trade, the robot has done the analysis, it has executed for you. It is now your job to check how the market is moving. This comes in handy when we're trying to manipulate the break-even trade, right? Because every 5 minutes there's a candle that has printed. It will tell you, is this market really reversing or is this market still continuing? Okay. If you took the trade on a 30 minutes, every 30 minutes you need to check what the market is going on, what the market is doing. Okay. So let's say you have a busy schedule. You've taken a trade in the morning Asian session with the robot, it has executed. As you go on about your day, check every 30 minutes. Oh, okay, how far is the trade? Should I move my stop loss to break even? Should I? Okay. It's not to sit on the charts now and you start watching the charts. No, that's not how the market moves. Once the trade is executed, it's beyond your control. You cannot make the market move any faster or slower. So your job is just to manage that trade. Okay. So if you cannot commit to checking the trade at every candle of your choosing time frame, do not trade that time frame. Trading the 5 minutes while you're at work or busy is setting up yourself to miss an important trade management. If you have a busy schedule, you can't trade on smaller time frames. Okay. Reason being, smaller time frame, like the 1 minute, the 5 minutes, they easily change either direction or whatever they are doing. So every now and then you have to check, oh, after 5 minutes, how is the trade going? After 5 minutes, how is the trade going? So best use 30 minutes. Also, every after 30 minutes, you can check, oh, okay, is the trade going in my favor? Has it hit take profit yet? Okay. So some common mistakes: traders with small accounts under 100 attach the robot to a 4-hour because they have heard higher time frames are better. But on a small account, the stop loss required for a 4-hour trade is 2. You'll find that's how you observe that once it has taken a trade on the 4-hour, your stop loss is within the same candle. But if we're analyzing using price action and whatnot, meanwhile your stop loss is supposed to be maybe 3-4 candles below the previous candle that you are currently trading on, right? So now in a situation where the stop loss is still there, you have to go down to your smaller time frame to check how is this trade being managed. That's why whenever you're trading, there are all these things that we are telling you. You have 15 minutes, 30 minutes, you're good. I personally, because I'm a scalp trader, I trade the 30 minutes time frame, sometimes the 15 minutes time frame. I'll attach the robot on the 30, it analyzes, takes a trade, then now I jump to either the 5 minutes to monitor how the trade is navigating. Other than that, always remember, a beep a day keeps poverty away.